now before 9, and you're 105.7. Highlands Light FM. Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation. It's time to check in and find out what's going on Wall Street this morning. Absent any government data coming out because the government shut down, we're overreacting to stuff every time you see the beginnings of a little trend, and we saw a little bit of that yesterday. Let's pick it apart together with Philip Statler from Statler Financial Services in downtown Sebring. Philip, good morning. It's good to hear you this morning.
Hey, good morning, Dave. Good to be here. It is, yesterday was a pretty red day. And I thought this morning when I got up and I looked at the futures, it was pretty red this morning as well. But something's evidently some people have gotten time to read some reports or do something, because now we've got the Dow's in the green and the S&P 500 is flat right this second. So it's not looking quite as bad this morning.
Yeah, we are kind of getting into that overreactive mode. The pieces that I read in my tip sheets, and it kind of squares up, especially given the fact that it's recovering this morning, was that, okay, fine, we got through most of the big banks on Tuesday and on Wednesday, and they had barn burner great reports for the most part. Then a bunch of regional banks ended up reporting yesterday. And if folks follow us, remember back a couple of years ago when the interest rates started going herky-jerky, and we scared a whole bunch of regional banks right out of business because they weren't able to keep up with their holdings. And what we ended up seeing was a couple of big losses from a couple of regional banks. And everybody says that kind of put the willies on the market for yesterday. And it looks, looking at the chart from yesterday, every time a report came out, we took a nosedive.
Yeah.
And then we get a couple of reports this morning that don't look quite as bad, so we're kind of overreacted and getting back to normal again. Fair guess?
Yeah, I mean, that's at least what it looks like right now. You know, I know you said there's no economic data coming out, and you're right, from the Fed government, there's really not. But yesterday, there's one that kind of piqued my interest a little bit. The Philly Fed manufacturing survey did come out, and it was negative. I mean, it was just to give you some context. The prior month, it was 23.2. The expectation was for it to be 10. And it actually came in at a minus 12.8.
Oh, poop. That's not a good sign, but this kind of confirmed that the economy is slowing down. And, you know, the tariffs and the trade war that we evidently are in, we'll get to that in a second, it's definitely slowing it down. We buy raw materials from overseas, and the Chinese are saying, sorry, no more raw materials in a bunch of critical areas. So I'd expect manufacturing to slow down by a little bit, and without any national data coming out of the government, all we can do is, like we said,
right?
And panic on anecdotes.
So
that home builders,
the home builders confidence index was up, went up from 32 to 37 yesterday morning. So that was some good, better news than the manufacturing.
Well, that was good.
One. Yeah.
That was good to hear. Just throwing another fly into the ointment, I mentioned we'd get to tariffs later. No, there's no grandiose new news on the tariff front, but President Trump was doing a stand-up yesterday, and a reporter asked him about the risk of a prolonged trade war. President Trump responds with, well, you're in one now. Gosh. Thanks, Mr. President. That didn't help our mood on Wall Street one tiny little bit yesterday either. Got any other tidbits? I was kind of react to all the artificial intelligence stuff. Taiwan Semiconductor just absolutely kicked butt yesterday, and we got a bunch of other tech stocks that were doing okay. The rest of the marketplace, okay. Look at the regional banks. It kind of gave us a negative pall yesterday.
Yeah, it did. And you know, the other thing I'm seeing is economists are starting to warn about small businesses are being crushed by the tariffs. And that's a big warning for the overall economy because, you know, let's face it, the small businesses are the base of our economy. And so if they get crushed and you can't stay in business, that's going to result in a very, very big slowdown in our economy.
Yeah, the simple fact is, it's not just meme wisdom to say that every big business started out as a small business, and if we stunt the growth of small business, we're kind of taking the pipeline and letting it go empty on what's going to be our next major employers or growth industry.
Yeah, this little article I was looking at gave some instances, right? There's a company that in 2024 had to pay $45,000 in tariffs. In 2025, it's going to be $353,000 they pay in tariffs. It's a small company. They got 10 employees.
And I'll bet you they'll have 8 by the time they're done with that, right?
Yeah, big
If
deal.
any. Yeah, it makes a big difference in the process, and that's the unemployment picture that we're looking at right now. We were referencing the notion that we had a little bit of a panic off of some regional bank reports yesterday. One of the reasons maybe things are turning around a bit this morning is the batch of reports we've got this morning from the regionals don't look half as bad. We've got a bunch of Truist offices around here. How did they do on their quarterly report?
The Truist did well. They, the stronger than expected third quarter report. They were up 7 cents better than expected at $1.07. Revenue was better than expected. They're up a little over 2.5% this morning. One of the things that's going to be interesting as we continue down this road, Dave, is we haven't heard a whole lot of talk about it lately. Is what do credit card delinquencies look like? What are those going to be? Because I think that's going to weigh heavy on the regionals as well as the big banks going forward. But you're right. Today is regional bank day. We had Fifth Third Bank, which we don't have any of those in our area, but they had a better than expected quarter as well. Beat on earnings, beat on revenue. And they're trading up 2.33%.
Cool.
The Huntington, which we used to have Huntington way back in the day, not so much anymore. But they had a good quarter across the board. They're up almost 2.5%. I mean, it's like everywhere I turn, the regional banks are up, 2.5%. The only fly in that ointment happens to be the Bank of Ozarks. They're down 0.75%. And that's I'm trying to remember what their deal was.
Other than a dumb name change a couple of years ago.
Well, they missed. They missed on earnings. There it is. They missed on earnings. So that, yeah, out of everybody else, they're the ones that missed on earnings.
You were mentioning before we went on the air that anecdotally from some of the banks that had big losses yesterday, you were seeing some, I won't say bookkeeping discrepancies because that sounds almost crooked. I don't mean to make, but they'd taken some risky loan positions on a couple of those regionals that got tanked yesterday. And maybe it was just we panicked on a couple of anecdotes yesterday.
It could very well be that's just not the norm for these regionals. You had a couple regionals that went out there and stuck their necks out for some riskier loans, trying to increase their returns on their portfolio. But yeah, we also had a couple other. We had American Express reported. They beat by 14 cents a share, $14.14 a share. Revenue had expectations. They're up 1.8%. Now, going against that grain, Interactive Brokers, they had an okay quarter. I mean, they beat on revenue, they beat on earnings, but there's some fly in the ointment there that's not showing up on my report because they're down 1.25% this morning.
That's not a company I'm familiar with. Do they do a website we'd be familiar with? Interactive Brokers.
Interactive Brokers, they're big. They try to lure the independent brokers. My industry, some people use them in my industry. They were known at one time for a big options platform to help options traders at one time.
Okay. Not a big direct-to-consumer business. They're
you'll
kind of
see
specialty in your life.
If you're in CNBC, you'll see them pop up trying to get the retail guys there. So the last one I have for you, you mentioned it yesterday, but it didn't report till after the market closed yesterday. CSX reported better than expected Earnings 44 cents versus 42 cents. Revenue basically in line with expectations. They're up 2.8% this morning.
All righty. Resetting the table from yesterday, we had a lot of red ink yesterday, like we were alluding to, the combination of tariff worries based upon what we're hearing out of the presidency and a little bit of a panic on the regional banks. 45 minutes before we open today, how are we looking?
Yeah, we faded. We faded since we've been on the radio here, Dave. The Dow is only up a little over 0.1% right now. The S&P 500 has trailed down about 0.05%, and the NASDAQ 100 is down about 0.3% right now. So other than the Dow, we're in the red. Silver up, silver's down from yesterday's high, down almost 2% to $52.29 an ounce. Gold's up another 0.6% right now, $4,329 an ounce. And crude oil's up 0.3 to $57.64, which is about $1 less than where it was yesterday.
Yeah, I was looked at that number and I went kind of holy moly, and I gassed up yesterday. I should have waited. Looking across the pond, the Asian Rim market was completely unimpressed by President Trump's characterization of being in a tariff war. Everybody was off in the Asian Rim. The mainland Chinese markets, one of them is down by a full 3% yesterday, so it was pretty much solid red in the Asian Rim. European community also off, not as vociferously, but still the average European index is down about 0.8% halfway through their trading day as well. Calm down. You can still retire. You just need to plan it properly. And that takes a pair of eyes that knows what they're doing. How do I find you to get my retirement plan back on track?
Hey, Dave, just to spend 30 minutes on the phone to make sure you're going the right direction for your retirement, just give us a call, 863-382-0037 to schedule your core retirement analysis. That's just 30 minutes, you and I talking about where you are, where you need to be. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m., 95.3 FM.
And back next week to keep you in the loop as to what's going on each morning here on Light. I will see you then, my friend. Let's not forget to remind everybody about Shred Day next Saturday, right?
Absolutely. A week from Saturday, we have Shred Day coming up. That's October 25th. 9 to 1, an hour earlier this year. So we can get done an hour earlier this year. So it's not quite as hot in the afternoon. So 9 to 1, right across the street from First Baptist Church on the corner of East Center and Mango Street in that grass parking lot there, just where we were last year. Looking forward to it. Bring your shred items, bring a food item for the food pantry. They'll be there gathering that stuff as well. So looking forward to seeing everybody.
Got you covered. And go Noles this weekend. You got to stay up late to watch your game this weekend. They're not starting until 10:30.
Yeah, I don't know if I'll make that. That's a little past my bedtime.
Be well, my friend. I'll talk next week.
All right, man. Take care.
All right. 105.7 Light FM and Statler Financial Services. Philip Statler.
Hey, folks, again, I want to thank you for joining us today. Have a great weekend, and I'll see you on Monday. Bye now.